Welcome back everyone, and in this video, we're going to discuss one of the top dividend growth stocks on the market right now. This is one of the largest holdings in my personal financial freedom portfolio and is a stock I plan to hold for the long term while collecting that growing passive dividend income every single quarter. They are a brand with diverse global operations and expanding product mix, and that company is Pepsi, one of the strongest consumer names on the market, and the company currently trades at a price of $134 per share, and they have a market cap at $183 billion. And the company has a current dividend yield at just over 3%. So in this video, we're going to discuss Pepsi as a whole, go over the company's fundamentals and their future growth projections. But before we do that, I'm going to ask you, as always, to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And now we're going to take a look at Pepsi, the future dividend king and the third largest holding in my personal portfolio that has a value of over $89,000. And currently I own 39 shares of Pepsi with a market value of over $5,200. And this is a company who has a long history of providing their shareholders with excellent returns. And over the past decade, the company has grown their share price 111%, not including the returns you'll collect from those dividends that are growing each and every year. But over the past few months, the share price has been on a slight downtrend. And we can see from the high point back in late December 2020 at over $148 per share, the company has now dropped close to 10%, leading to an excellent buying opportunity for Pepsi stock. And at this current share price, the company is now trading right around their estimated fair value according to Morningstar. And in our current market environment, many companies are trading at sky-high valuations and are way overvalued. So being able to buy Pepsi on a 10% decline and trading right around their estimated fair value plus a current dividend yield just above 3% may be a very attractive company to take a look at right now. And when you buy into Pepsi, you're getting immediate exposure to dozens of global top brands in the snack and beverage industry. And we can see under that Pepsi umbrella, they own 23 different billion-dollar brands. So 23 of their brands have generated over $1 billion in annual sales in the 2020 fiscal year. And Pepsi products are sold in over 200 countries, and the company employs over 290,000 people. They generated more than $70 billion of revenue in 2020, and operating profit came in above $10 billion. And they own the famous names Tostitos, Lay's, Mountain Dew, Doritos, Gatorade, Quaker, and of course many more. And in 2020, Pepsi had very strong global operations. They generated 62% of their revenue from North America and 38% from their international markets. And from their total sales that topped $70 billion, the company generated 55% from their snack brands and 45% from their beverages. And right now, when people think of Pepsi, they don't really associate the company with the snack foods. Rather, they primarily think of Pepsi as a beverage company. But we can see 55% of their total sales are actually coming from their snack brands, and they are a leader on the shelves of grocery stores all across the world. Going forward, the company is also projecting between 4 and 6% annual long-term sales growth, which would be an amazing rate for this blue chip dividend paying company. And we can see that they believe they still have a ton of growth potential as their overall market will continue to expand at 4 to 5% per year, and Pepsi only controls a small percentage of the global market with tons of future growth opportunities ahead. And over the past few years, Pepsi has done an amazing job of growing their product mix through mergers and acquisitions. And we can see from 2013 to 2017, the company only spent $556 million on total acquisitions. But from 2018 to 2020, they spent over $10.5 billion to merge and acquire names like Rockstar, the energy drink company, SodaStream, Kivita, and a lot more. So the company understands to expand globally at a faster scale, they're going to have to buy up some smaller names, and I love the purchases they have made as of late. And recently, Pepsi has announced a new partnership with Beyond Meat. They are the leader in the plant-based food sector, and going forward, that is a highly lucrative industry that Pepsi wants to enter into. So this new partnership, I believe, is a match made in heaven. Beyond Meat has the expertise in that plant-based sector, and Pepsi has the decades of experience in the snack and beverage industry. And together, the two companies are going to create a new product and a new name under the Planet Partnership. And together, they're going to create both drinks and snacks in that plant-based sector. And I believe over the next few years, that entire market's only going to expand at a fast rate. And Pepsi will be a leader with Beyond Meat, and their products are going to be in the shelves of stores all around the world. So another major partnership that I think is going to benefit Pepsi shareholders over the long term. And the next thing that we're going to go over regarding Pepsi is the company's dividend. So at this current point in time, their yield is just around 3%, and their dividend growth streak is at 49 consecutive years, which is absolutely insane. And in 2022, the company will officially become a dividend king at 50 straight years of dividend increases. So that means during every recession and depression that we've gone through over the past 49 years, not only has Pepsi paid out their dividend, but they've increased it even throughout those tough times, which is absolutely incredible and shows how resilient this company is to any economic situations. And over the past few years, the company's annual dividend growth rate is at around 9%, which is absolutely insane for such a large, well-established company. And if we take a look, the current yield at around 3% only makes up 67% of the company's total net income, which is very low and sustainable in the consumer sector. And the company has a dividend safety score right now at 93, meaning it is very safe and is extremely unlikely that we see a dividend cut coming from Pepsi anytime soon. And recently, the company has received a lot of love from Wall Street analysts. And Bank of America believes Pepsi is well positioned for the fiscal 2021 year and for a strong recovery after the pandemic. And they've issued a buy rating for the stock with a price target of $155, which is well above the current level of $134 that we sit at right now. And if we also take a look at a full analyst report, we can see that Pepsi's share price is expected to grow by another 14%, and from 20 different analysts, the average price target is at $152 per share. And at this current level, the company is considered a buy with 5 strong buys, 7 buys, 9 holds, and only 1 single strong sell. And over the past 6 quarters, the company has beaten EPS expectations each and every time. And going forward throughout the 2021 fiscal year, we're projecting total revenue growth of around 7% and total growth of just under 12% by year-end 2022. And taking a look at Simply Wall Street, the company is forecasted to grow annual earnings by 7.3% per year over the next 3 years in the future. And we can see from their current position over the long term, total revenue and earnings are projected to grow each and every year. And by 2025, we're projecting over $84 billion of total revenue and over $10.4 billion of net income. And we can see on Yahoo Finance, they're projecting around 8% per year share price growth. Tie in that 3% growing dividend, Pepsi's total return to their investors can average over 10% for the next 5 years in the future. And their current share price of $134 is below the 12-month expectation of $152 per share. So definitely some upside potential for Pepsi shares to climb higher over the next 12 months. And if we take a look at the company's financials and start off with the income statement, we can see that year over year, total revenue continues to climb to record highs, and in 2020, they generated over $70.3 billion in total sales. And for a massive company, the continuous growth in total revenue is very nice, and we can still see that the company continues to expand year over year. And if we take a look at their net income, it does fluctuate over time. Different years have different acquisitions, different one-time expenses, but overall, Pepsi remains very profitable, and in the past 12 months, they've generated over $7.1 billion of total net income. And taking a look at the balance sheet, the company has a total current ratio just around 1, with $23 billion of total current assets and short-term debt coming in at $23.3 billion. So the current ratio is definitely not the strongest, but it is close enough to 1 where over the short term, we're not really worried about any liquidity issues coming from Pepsi. And overall, the company's done a nice job of growing their total assets over the long term, and they now sit above $92 billion. And overall, I believe Pepsi may be one of the top dividend growth companies on the market right now that is trading for a reasonable price. The recent decline that we've seen in the share price has brought it down to, in my opinion, a very attractive level, and getting into Pepsi around $134 or $135 per share may be a great addition to your dividend portfolio. You can lock in a starting yield above 3%, collect that quarterly cash flow that has been growing for 49 consecutive years with no end in sight, and I think for many decades going forward, Pepsi will continue to grow that dividend to their investors each and every year. And the company is so well diversified, operating in over 200 countries. They own 23 different billion-dollar brands. Their entire revenue is not determined by one single market or one single product. And as a whole, Pepsi is just a company that I think will dominate the snack and beverage industry for many years to come. I think they're so large, so well diversified, so well expanded across the planet that not many names can come in and compete at such a scale that Pepsi has already achieved. And now we're going to wrap up the video. Thank you for watching to the end. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. And of course, today we had to focus on one of my favorite dividend companies, and that was Pepsi. We took a look at their investor presentation, went over the company's financials, and I believe they may be a great buy at this current level. So thank you for watching to the end, and I will see you in tomorrow's video.